Is time still money? That may have been the case from 2020 till the midpoint of last year, where pre-owned watches were rampant. Some even sold at 4 times their retail prices. Alas, ever since its peak in May, the overall resale value of luxury watches has dropped by a quarter. While analysts think this secondary market decline indicates softer demand in the primary market, watch dealers, on the other hand, think the slip reflects a correction of the market rather than a permanent downturn. So what could the market decline truly mean? Let's find out in today's video. Can you hear the sound of a luxury watch bubble? You may want to pay close attention. As with real estate and many other market sectors, the watch industry has a long cyclical history. Over the years, we've seen global events and recessions drastically reduce demand. Things slowly getting better, demand dramatically increasing, brands increase production to meet demand, economies cool again, and then the large supply of timepieces in inventory leads to a heavy discount or even cut prices in the secondary market. It's almost like a rinse and repeat situation. However, for those who invest in the watch market for passion, profit, or even both, the topic of mysterious bubbles forming or if or when they might burst always comes up. But the truth is, people can be a little hasty in their doomsday calls. It's almost impossible to accurately spot a bubble every time. To be frank, you can only know something was a bubble if and when the bubble eventually bursts. Everything else is speculative. But what's a bubble? In the simplest of terms, a bubble is when the price of an asset exceeds the rational value and where even if you look to the future, it's hard to believe the asset can realistically catch up to the current price. A market bubble is created by speculation and then fueled by people expecting the prices to grow forever, which of course never happens. Let's relate this to a popular brand like Rolex. For example, a Rolex bubble starts when people speculate and expect the return on investment to grow beyond feasible expectations. At this point, people start buying the timepiece in staggering numbers, even though the timepiece is being sold twice or thrice the normal retail price on the secondary market. Could that be what's happening in today's market? We'll let you decide that. Right now, the resale prices of luxury watches are drastically reducing, but should we be too wary about it? The fact is that the drop in resale prices is a logical reaction to the frenzy of demand in 2020 and 2021, when there will be a time of significant wealth building. Let's listen to what Tim Strake, the co-chief executive of Chrono24, one of the leading online marketplaces for new and used timepieces, has to say. According to him, there are a multiple of factors, including an abundance of cheap capital that drives demand. A lot of people start buying watches and so they rise in value. Let's look at Patek Philippe to better understand the latter. In collaboration with Tiffany & Co., the luxury brand introduced a limited edition Nautilus 57111A018 model at a retail value of under $53,000. Did you know that the very first piece sold for $5.35 million in an auction? Seeing the dramatic surge and the sensational opportunity to flip similar models for crazy multiples of their original retail price, so many buyers flooded the resale market with one aim: flipping it. Moreover, thanks to the prevalence of accessories in pop culture, there are now far more people interested in luxury watches today, especially when compared with previous decades. Just log into your Instagram account or watch hip-hop music videos, you'd see luxury timepieces and other accessories everywhere. Not only are people interested in how the affluent lives, but also they mirror their appearance. But there is still far more demand than supply for watches in the primary market. It's ever so difficult to walk into a certified Rolex retailer and walk out with a shiny new timepiece. So what's the fuss about the current sale of the luxury watch market? Before we go into this, let's take a walk down memory lane when the US Federal Reserve started hiking rates. For those who aren't aware, the crypto bubble popped and household cash reserves began to dwindle. Watch prices quickly followed suit, entering a months-long decline. Let's look at the highly coveted Rolex Daytona reference 116500, which peaked at $48,500. Now, that same timepiece is down to about $30,000. According to watch charts, over the last 12 months to the midpoint of January, Rolex is one of the worst performing brands, with the average listing price down 15%. Rolex's junior brand, Tudor, comes in second place with a fall of 11.5%. However, do you know the tumbling price of used watches from luxury brands like Rolex can be explained by a simple principle in economics? Have you figured it out already? We're referring to the age-old principle of supply and demand. The demand for luxury watches from the likes of Rolex, Audemars Piguet and Patek Philippe was so high that the prices buyers were willing to splash out to buy a piece encouraged dealers and collectors to look into their inventory and collection to sell for astronomical prices. While speaking to Insider, Charles Tian, the founder of Watch Charts, said, "What we saw was that basically the floodgates opened and we saw a significant influx of supply, particularly for the most in-demand watches." According to a Morgan Stanley analysis of Watch Charts data, did you know the number of Rolex and Patek Philippe watches on the market doubled last year? Audemars Piguet even had a 78% increase. According to Eduard Urbin, a Morgan Stanley equity analyst, the increase in inventory was a result of watch dealers and individual watch investors offloading their stocks. Urbin also points out the price correction was mainly driven by the increase in supply. What about the sellers who financed their inventory with variable rate loans that got increasingly expensive to handle as the Fed rates hiked? For a lot of them, the only way out is to accept a lower price to liquidate their holdings, even if it meant they'd be having a loss. There are so many other reasons why watch prices are falling so fast. In China, high-end pawn shops did brisk business as COVID lockdowns forced HNWIs to raise cash. It could also be the crypto bubble burst as a lot of people who got quick cash turned to the watch industry to turn their tokens into tangible assets. According to Morgan Stanley research, Rolex is estimated to account for 42% of the global used luxury watch sales. Patek Philippe and Audemars Piguet come at a distant second and third place respectively. They combine to make 28% of the sales of used luxury watches. But surprisingly, Chinese watch sales have been spectacularly bad recently. The Swiss Watch Fed, Fédération de l'Industrie Horlogère Suisse, released a report showing month-on-month export growing. On it, Chinese watch sales were decelerating nearly everywhere. Greater China was down by 22.6%. Things are awful in Hong Kong as well. There, a reported 19.8% year-on-year reduction happened. The primary watch markets of China may have reopened in December, but the status seekers and resale flippers just didn't turn up as expected. However, outside of China, Rolex still reigns supreme. Their second-hand certified models still tend to sell at a premium to the retail price. Even with the market sliding, the Rolex Daytona 116500's resale value of $30,000 is still more than double the $14,800 price on retail. Good luck finding one to buy though. But one thing is for sure, if the secondary market drop turns into a China-led industry-wide cyclical downturn, the value of whatever is on your wrist might plummet. Well, unless you just buy a watch for the sake of telling time or its functionalities and not about its resale value. In that case, we don't think you should be too worried. There are some things we'd like to add though. If you're one of the wealthy buyers that can spend more than $10,000 or even $100,000 on a luxury timepiece, it's hard to imagine you'd be truly affected by the slide. It's not like you sell off your watches, right? Rolex has even introduced its certified pre-owned program. A lot of people in this category may be looking into the program. After all, regardless of the situation, the wealthy wouldn't stop spending on what they crave. In addition to that, if you're one of the people who love the craftsmanship of a watch and plan to keep it for decades or even generations, what's a better time for you to start adding to your collection? Now could be one of the best moments in recent memory. However, do you think the watch industry should be concerned about the fact that most human beings have either lost interest in getting a luxury timepiece or are no longer able to afford what was previously considered a normal purchase?